All right, you moderate maniacs, how'd you do this month? How'd you do? Let me know. Give me some comments. Not a bad month, right? Not a bad month at all. And as you'll see from these figures I'll give you in about a minute, mine is actually looking pretty good, even though I took that $12,000 out of my retirement accounts last month in June. Yeah, this is July update, so in June. It's still looking pretty good. That is one thing you have to remember. When you are withdrawing money from your retirement accounts, if at all possible, you want to do that when the market is going up. If it's going down, you're just compounding your losses. So if you can, guys, at least wait till it's kind of stable, flat. If not, even better, when it's going up. That's when you want to take money out. As you'll see from these figures, it's worked out okay for me so far. So here we go. And yes, we are doing the ASM. I've had more pros to that than more cons. I had some people saying, what's with all that noise? It's ASM, baby. People seem to like it. Honey, do you like the ASM? She never talks. It doesn't matter to her, man. Silent, loud, whatever. So for those of you who see me for the first time, and believe it or not, my normal viewers, there are a lot of people. This segment is where people really look to my channel for the first time. So that's why I explain all of this as if you're looking at it for the first time. This is when I retired back in August of 2021. That is how much I had on hand when I retired. Okay, 401k IRA cash. One thing, for those of you who see me for the first time, when you retire, make sure, I would say you have at least 2 years of cash on hand. That was a little more than 2 for me. Okay, since my expenses then were $2,800 a month. My expenses now with inflation, I bumped them up to about $3,000 per month. Make sure you retire with at least $2,000 in cash. Why? Here's why. Look down here. 6 months after I retired, the market tanked. This was my low month, January of 2023. Look at how far down I had fallen. 548 all the way down to 438. This would have been much in my investments, not my cash, but in my investments, it would have been much worse. And that's where you don't want it to be worse if I had not had all that cash on hand. So I dropped down to 17% lower than when I retired in the 401k, 23% lower in the IRA from when I retired. For a grand total of 438, $110,000 down in a year and a half. That's called sequence of returns risk. Not a good place to be. So last month, this is where I was. 341 in the 401k, 163 in the IRA, 22 in the cash for a grand total of 526, okay? For those of you wondering, the reason I am calling this my tanked portfolio, I will continue to call it my tanked portfolio until I am even with that or above. Haven't got there yet, but I'm confident I will. Hey, question for you guys. I mentioned this in another video. I think it was my compilation I did with Joe Kuhn. If you guys haven't checked it out, the collaboration, check it out. We were talking about investing. What I'd like to ask you guys, let me know where you think you'll be in 10 years. I'm not talking about your total nest egg, the amount. I'm talking about your investment allocation. Do you think you'll be invested similar to what you are today? So it could be a drastic change for some of you. If you're like 55 now, 65 in 10 years, or like me, 62, I'll be 72 in 10 years. My plan at 72 years old, 10 years from now, is to be probably out of the market. Why? Now, this hinges on if I am in a place with my overall investments where I think that could last me I'm planning out till I'm 90, the next 18 years. If I'm confident on that figure, I'm out of the market. Why? Because it's like, when you've won the game, why keep playing? The stock market can be risky, right? So what my plan, I think, will be 10 years from now is to still have most of my money invested, but in very safe investments, maybe like T-bills, maybe even CDs, so I can get that 4 or 5% per year. In some years to not beat inflation, in some years that will beat inflation, but at least to keep up with inflation. So let me know what your guys' plans are 10 years from now. Okay, so anyway, here's where we stood last month. This month, how do you think we did? Better, worse? Well, I'm here to tell you. Honey, She knows how I'm doing. Okay, now I have to be honest. I'm hanging on by the skin of my teeth because I haven't got that Maserati that I promised her. So guys, say a prayer for me, all right? She might not be here next time. Okay, so in my 401k, I am here this month, or actually July. IRA, I am here. My cash, I am here for a grand, dare I say, gaudy total of boom. Look at that, guys. I am up this month in my 401k. Not bad, right? Is it gaudy? Honey, is it gaudy? If it's another million for her, it's gaudy. If it's not, it's not. Okay, we're not gaudy. My IRA, 167 now. My cash has gone down because, as for those of you who see me for the first time, I support myself ever since I started my YouTube channel a little over 2.5 years ago on my YouTube earnings and my cash. Okay, last month I took $12,000 out because I was running low on cash. All right, so that $12,000 is included in this $20,000 cash I had. So the reason I took two out is because my YouTube earnings, you know, it's rounded off, could be $1,000, $1,500. Sometimes they could be over $2,000. Then I won't take as much cash out. But my overall expenses monthly are $3,000. That's why that cash has been taken out. 536, we're getting closer. We're getting pretty darn close to calling this no longer a tanked investment portfolio. What are we going to call it then? A golly gee whiz investment portfolio. So percentage-wise, where am I percentage-wise from when I started? Okay, on one, man, these are the best figures I've seen in a long time, maybe ever, on my percentages. Check that out, guys. I am now 8% up from when I retired in this 401k. This used to be a 401k, which is now an IRA. I am now 11% up from when I retired in that IRA for a grand gaudy total, again, of $536,000. Guys, to me at least, this is the way I look at my investments. If I can be close or obviously above the amount I had when I retired, almost 4 years into retirement now, I think I'm looking okay, especially after that sequence of return hammered me for the first 1.5 to 2 years. Look at how far I went down, right? If I'm back to almost that, I'm pretty happy with that. So that's where it is. So YouTube, how'd I do in YouTube? My YouTube earnings, and again, for those of you who see me for the first time, these earnings are after YouTube takes its 45% cut from ad revenues. So this total you see here is 55% my channel earned as a whole on YouTube for the month, after YouTube takes their 45% cut of all advertising revenue on my channel. May, I made $1,450. For me, this is kind of low. Okay, last year at this time, it was more like $1,900, $2,000 a month. And this is increased competition. You know, there are more channels out there for people on moderate income than there were when I started. Can I pat myself on the back a little for that? Okay, I will. There are more channels out there. There didn't used to be. Also, advertising revenue has gone down. Okay, it has gone down a little bit. $1,450 in May, $1,450 in June. So where do you think I was in July, huh? I did have a couple videos that did pretty well this month, or in July. You guys will be seeing this probably August 1st, so last month. So July, my YouTube earnings were, dare I say, not gaudy, but better. $1,600 of YouTube revenue. Now, this is also before I take my taxes out. Okay. Now, just so you guys know, if you haven't heard this before, YouTube creators, we are contractors. Okay, so we have to pay quarterly taxes on this. I'd never done that before. I was just a regular employee, so for me it's different. But once you get used to it, not bad. So anyway, $1,600. Here we are. We're up. We are up from June. Overall, it was a pretty good month. Guys, tell me how you did. I'm really curious on that, on how you did for July, and also where you think you're going to be 10 years from now in your investment allocation. Will it be the same? You know, for some of you, if you're thinking about, you know, Michael Kitces came out with a rising investment glide path for retirees. I don't buy into it, but it's a pretty popular way to go about things in retirement. I wouldn't say the majority are into that, but his theory is that the older you get, the heavier you should be in stocks. It's not for me, but his data kind of supports a lot of that. So anyway, you might be followers of Michael Kitces. For those of you who don't know, his last name is Kitces. Look up Rising Investment Glide Path for seniors. It's pretty interesting. So anyway, guys, let me know where you're at, where you think you'll be in 10 years, how you did in July. And as always, from me and my lovely honey, we got this.